The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. 877-927-6648 if you have any questions. We're having a pretty active day in stocks. We're having a pretty active day in commodities. I posted the ETF for the commodities that I watch. There's actually two of them. I don't trade it, but I watch it because it's one of the more important ones. That's the DBA. And it shows, after we came off that 786 retracement a couple of weeks ago, we've had basically a vertical move, and you see all these gaps. And the gaps are caused because of the weighting that they have for corn, wheat, and soybeans. In fact, just about anything that's growing now across the Midwest, the heat is terribly bad. Rich Anderson had alerted to this, several months ago, and I've said it a few times, that I've never been through growing season where we haven't had a few, crop scares. And the first time it rains, there'll be a huge correction, and then we'll have some more patterns to look at. But right now, it's just been a vertical move up, with temperatures 100 degrees on LaSalle Street there in Chicago. So I'm going to cover a lot of that tomorrow because we have, big things happening in natural gas. It's continued to move higher after it made that 61% retracement. But the main thing today, I think that we have to be watching out for is that we're having a pretty good bounce off of that. I thought the S&P was going to get down to that 1298 level, and we only got down to 1302. And that's where it's had a pretty good rally from, and we're actually still continuing to go up. So my assumption is that we will probably be looking at some higher prices coming in, but this could change in a heartbeat. If the Supreme Court comes out and surprises everyone. Like I mentioned before, my inside sources, who are usually 100% wrong, have pegged it 6-3 for the destruction of Obamacare. But whether that happens or not, we'll wait. We'll have to wait and see what they decide. I guess tomorrow or the next day. If they were really gentlemen about it, I think they'd do it over the weekend so the markets could come in fresh, and do their gapping, on the weekend as opposed to overnight. But I guess 6 of one, half dozen of the other. It doesn't make any difference. On today's show, we have to also cover some crude oil because we have bounced off of that bottom in natural gas that we looked at. Where it was making that butterfly bottom, just like it had made the butterfly top 40 cents higher. Now it's made a butterfly bottom, and now what we're going to be looking at is to see how much we're going to get as far as the rally should go. Today is a really happy day for me because I have had the chance. About 25 years ago, I was able to train a young man, a farmer from Iowa. And he was in a farming business. It was an integrated business. They had farming and feed operations, hogs and everything. I was able to train his son, who's also still trading with his dad in the business. And now I'm going to trade the grandson, who's 20 years old. So this is it's fun, to be with somebody young and that knows a little bit about. He knows a lot about the business for a young man, but this is the first time in all of my years, 50 years, that I've able to do a whole generations, and so that makes me feel really happy. And then the sad part, send some white light out to Nora Ephron, the Academy Award-winning writer and producer. She did Sleepless in Seattle and When You've Got Mail. And she died of leukemia, and she was just a year younger than me. So be thankful for what we have, folks, because you never know when that roulette wheel up in the sky calls your number. And just as you get older, you realize that wheel is spinning faster and faster, and it's starting to slow down. So you have to be a little bit careful. Now, I still believe, we'll get back to the stock market for just a second here, I still believe that, we are going to be choppy to the upside bias here until, late July, early August, when the Bradley model is getting ready to turn, and after that it stays down for well over 9 months. It hasn't been perfect, but it's certainly been better than the economic predictions of most of the people, coming in into Wall Street. So we'll have to rely on it as best we can. Now, in the U.S. dollar front, the euro has gone down and it has stopped at the level that we were looking at, that 125 level. Actually, it was actually 124.66, and we're trading almost at that right now. And this is the third or fourth time that we've been down to that level. So the euro must hold the 124 level, otherwise it'll go down and possibly break out to 122. And then, we'll be able to, go even lower. The U.S. dollar index is now making a, 786 retracement after we had made that big AB equals CD pattern down at the 81 level. And so if we get above 83 in the U.S. dollar index, then the euro will start to, dissipate, and then you'll see things, start to go down. The British pound also held up where it should have at that 155 level, at least so far. And believe me, early in the day like this, everything is so far because things move very, very quickly. So these are the things that I'm watching right now. And of course, this I really believe that this Supreme Court thing will be a game changer. Not because of what they're going to do, is the fact that they might the fact that a group of people actually go up, against the monarchy in Washington and say, look, this is not a just bill, so let's redo it. And that'll tell us that we've got somebody watching our back, and that's what we really need, because our congressmen and senators, they are not watching their back; they're watching their billfolds. That's as close to the back as they're going to get. So if we can get the Supreme Court to act correctly, well, what am I saying? I'm saying act correctly the way I think they're going to act correctly. It's whether I think they're going to be correct, and I don't follow politics. All I know is when you have a bill that's 2,900 pages. Brother, it can't be right. There's just too much in there that's just not correct. So that's all I know. That's why our Constitution is written on one sheet of paper, and I think it's a lot better if we do it that way. So if you have any questions, it's 877-927-6648, and I'll be happy to answer any questions. I want to go to the dollar index here because we were discussing it, and I wanted to illustrate to the people in Tiger TV. We made that ABCD correction. Just a few, the small one. You'll see the really big one that topped up around 83. But when you go to Tiger TV, you'll see the smaller one that finished down at the 81.30 level. That was a perfect AB equals CD Thunderbolt pattern, and it's rallied up to the 61% retracement today. And we're trading right at the 61% retracement, 82.79, and that's why we're at the same level in the euro at that 786 at 124.60. So that's why we're hovering here. And I believe that most of the market participants are probably waiting for the announcement to come out of Washington. And I don't know much about the bill. I just hear good things. Well, I don't hear many good things, but I hear bad things about it. But frankly, it'll probably be some type of a game changer for us in the market. But we'll know more about it, of course, when they finally come out. It would be good, in my opinion, to get it less than 2,900 pages. That's just my personal opinion. And of course, everybody knows what opinions are. We've been through that again. Now we want to. I have to break this down a little bit because I'm going to take a little bit extra time to talk about the the crude oil. But frankly, what I want to do now is I want to give you an idea of what I've been looking at, in the E-minis, because we had a really strong probability of the market coming down to finish that level at 12.99, but we only got to 13.02, and now what we're doing is we're having a rally, and this rally, we have been this has been the third day of it, and we can easily get up to the the 13.36 level, which is the 61% retracement of the move down from the full moon. The new moon that we had on, June 19th. So if we can exceed that, then we've got a chance to go up to the 1385 level, and that would be my ultimate prediction. If we can do that, and that comes into late July, early August, then that will be what I think will be the mother of all sell signals. It'll be similar to the one that we had last May. And we haven't even approached any of those, so we think that we are still in a bear market. We have lower tops, lower bottoms on the dailies, and I think that we just have to see what kind of a move we're going to get over the next 4 to 5 weeks. I think it'll be choppy. We've already seen quite a bit of choppiness, but that's my opinion. I realize that it's very similar to what Basil was saying. He looks at certain numbers just like I do, because most technicians, understand support resistance, and that's what we're looking at. I want to take a second here to discuss. I want to do it right now, but I've got to go into this a little bit before the break, and I will do it right now, and then I'm going to continue it after the break, because I know the break will be coming in a little bit. But I wanted to put something up that someone called me about this morning. Someone who had not, had heard of me on the internet, or Tiger. I think it was Tiger TV. Anyway, he asked me to take a look at a stock called URI, and he had been in this stock, and he said he couldn't see anything technically, feasible with it. It's one of the larger leasing firms for large equipment, and this is one of his favorite stocks to trade. And all I did was do a 30-minute chart on it, over the past month, and you'll see that the incredible AB equals CD moves that are here. The market topped back on the 19th at 3660, and it broke down and stopped exactly at the 786 at 3080, and he was still very skeptical, and he said, well, I don't see any prediction here. And all I did was show him the small little ABCD pattern that was forming now, and I said the market should top at around 3230 today. And actually, as luck would have it, the market opened higher at 32.30, and then sold off almost a full point, from that level. And on a $30 stock, a full point is quite a bit. And all I'm trying to do here is to show you that if you have a stock that's trading more than 800,000 shares a day, it's going to follow these numbers and these patterns very, very closely. And the reason for that is we are all human beings, and believe it or not, we all act alike. I mean, we might think that we act differently, but in fact we do not. We are all products of the universe, and we respond to fear, we respond to greed, and this is why the whole thing comes together. The way that it actually, in my opinion, the way the universe actually works, and because I believe in what Albert Einstein said, and he said, God does not roll dice with the universe. God does indeed geometricize. And so if you take both of those in there, looking at a little bit of geometry and the fact that these are all probabilities of things that we're doing, nothing is perfect. And this is the reason why we're here at Tiger TV, trying to give everybody a little bit of information, a little bit from me and Basil and Steve and Tom. And I'm frankly worried about Tom, because I know he's out on a boat somewhere. And there's a lot of bad weather, down in the southern part of the hemisphere of Florida where he lives, and I just hope that he's okay. I've not heard any bad reports, but I would like to know if he's all right, because they got 10 inches of rain in that area just a few days ago. And anyway, we've got to take a little break here to pay some bills. 877-927-6648. When we come back, we're going to do crude oil.
TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, and we have a caller from Philadelphia. Todd, are you there?
I am. Thank you for taking my call.
Todd, by any chance, did you see a beautiful little 14-month-old boy in a stroller going around downtown Philly today?
No, not today, no.
Oh, well, he's there, so if you see him, you'll know it's him. He's always singing.
He's always singing.
What can I do for you, my friend?
Well, I have a question. I just recently discovered your show, and I'm enjoying it, and had an instance where just kind of had a question to run by you and, maybe provide some education for both myself and listeners. I will frequently write puts on issues that I don't mind owning, sometimes at the strike price, sometimes below, but, obviously fully understanding that, may be put to me, and that's okay. Like I said, I do that in names that I, would either like to own cheaper or just collect a premium on. I've had instances where I've had an issue, expire at the strike price, exactly at the strike price, and my broker will, in that case, I've had, some contracts signed and sometime and not. And just in full disclosure, my broker is not TD Ameritrade or Thinkorswim, just to put that out there. But anyway, I had an instance where I had written a contract and collected the premium. It actually was on a weekly option. And the issue actually closed 2 cents above the strike price on the closing Friday. And, over the weekend is when I usually will get my notices that, my positions have expired or have been assigned. And that sometimes will occur on a Saturday, sometimes on a Sunday. Sometimes I don't get those notices until first thing Monday morning. And in this case, Monday morning, obviously before the market opened, in pre-market trading, the issue that I had written the puts against was below the strike price that had been, written previously, and that it was on it a weekly, like I said, that had already expired. And I got a notice saying that the issue had been put to me, which was quite surprising given that it had closed above the strike price. And I was just kind of wondering what your feeling was on that. I mean, is there, am I getting like the wool pulled over my eyes by my broker? If you could just elaborate or have any insight into that, that would be much appreciated.
Well, Todd, I will tell you this. I know enough about options to write on the head of a very small pen with large type. All I know about the options is when I was in Chicago, I used to see the guys from the CBOE walking out of the building, and they would have these big little badges that they wore on their jackets. Right. And it said, sell an option, buy a Mercedes. And so option selling is the way to go because, option buying, I think it's about 85% of the people that buy options lose money. But right. Option sellers, because they're more sophisticated, they do better at that. Now, in your particular case, I don't have any idea what's going on, but I'll tell you this: the firms protect themselves first and worry about you second. That's all I can give you information about that. But right. if you have an interest in pattern recognition and options, pattern recognition is ideal because we're actually we're buying on weakness and selling on strength. So the put premiums and call premiums should be at the very lowest price when you're ready to exercise. Now, like we had in the Treasury bonds, when the bonds were going up to 151, the put premium should have been falling dramatically, and yet the put premium was not falling dramatically because somebody was really laying on those things, and eventually the market turned down and the puts seemed to be the right way to go. So all I can say is pattern recognition and option buying and option selling work very good together, but you really, and you've already done this I'm sure, but for our listeners, options are a really, really difficult part of the investment thing because there's so many things. They have all these Greek letters, alpha, beta, deltas, that you have to figure out what the time premiums are. And I was involved, well, I don't want to get into the whole thing, but in 1987, I had options on that put options that were in the S&P on the day of the 19th that were worth about $20,000, and yet I couldn't get out of those until the market got to about $11,000. The floor people wouldn't even put a market in it. So that was an unusual time, but that's part of the thing that you have to worry about is the market risk.
Okay. Yeah. All right. Well, I appreciate that info.
Well, I hope it helps, and if you do like options, if you'll watch some of these patterns, especially the Gartleys and the butterflies, you can really do some great buying of calls when the premium is very, very small, and a buyer of puts when the premium is really, really small when the market's going straight up. We had a situation like that in corn, a few months ago when we were watching the December corn, and it held up relatively well. But I want to thank you for calling in, and if you see Avery, tell him his grandpa's thinking of him, okay?
Will do. Thanks very much.
Okay, thanks, Todd. Okay, we've got to take a break. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to be talking about the oil and natural gas, not natural gas, but the oil and gasoline futures for the next few minutes. But we had a question from somebody from Ohio about the, actually his name was Gary, I believe. He called in and asked us to cover wheat, and I posted that into the Tiger Den and the Tiger TV earlier today, and it shows that we've completed a huge AB equals CD pattern in wheat up here at this $7 level. The problem is, folks, that we are in a weather market. And weather markets are very, very tricky because the first time they get a few drops of rain on LaSalle Street, these markets will break a great deal, and then we will see what the real benefit of a technical analysis will be, because if the market is really bullish, it'll stop at some of these points that we look at, like 618 and 786 retracement. But right now, you certainly don't want to be long, the wheat or corn. I've told everybody last week. I said this is the time to to start taking profits in the December corn that we looked at when it was $5 a bushel. Nobody wanted it there. It stayed there for almost a month, and now it's $7,500 higher. The whole world wants it, so that's the wrong thing to do. So my recommendation here is you don't want to be going into the long side. Maybe they go straight up forever, but the risk here is incredibly great. You want to be at a point where the risk is very, very small. That's the ideal situation. I did want to cover one other thing. We were talking with Todd about options, and one of my most interesting experiences I ever had with options was back in 1991. I was actually fortunate enough to train some people from Goodyear Tire and Rubber out of Houston, Texas, because they did all the hedging for the Alaskan pipeline, and so it was really they had a huge trading operation. They had like 30 or 40 traders, and the head trader happened to be a good friend of mine and one of my students. I trained a couple other people in the office, and oil was at around between 40 and 41, making a huge butterfly pattern on the weekly charts. It had never been this high before, and we were getting ready to go to war because all the troops had already been into run on the outskirts of Baghdad, and we were coming into a new moon, which General Schwarzkopf was a big, strong believer in the art of war by Sun Tzu, and in that book he talks about, attack in the darkness of the moon. And so I assumed that it was going to be, I believe it was a Wednesday night in January, and but the 3 days before, John called me and he said, look, I got a directive, a letter from the chief operating officer of Goodyear that we should suspend all options and all selling of crude oil contracts until the war is over, because they think that the oil was going to go to $70 or $80 a barrel and they didn't want to be short. And he said, Larry, we are selling premium in these options, and he said we never get a chance like this. He said these last few months has been like heaven. He said because the premiums are so high. He said it doesn't make any difference because we hedge it on the other side, and he said it's insane. And I said what you need to do is to send him a letter and tell him that you will do it, but you have to absolve him of any responsibility, because if push comes to shove, it's not going to be the CEO that's going to be hanging out to dry if the things don't happen to go up, that it will be him. And so he did, and there was a little argument back and forth, and John's job was at stake, and he said no. He said I'm going to suspend it because this is what you asked me to do, but it's the wrong thing. And sure enough, the next day crude oil dropped $11 a barrel right after the war. It was the biggest drop crude oil has ever had. It was January of 91. It went from 42 to 31. I remember that day like it was yesterday. And of course, guess who they tried to fire? And he had all the information stacked up saying, look, I told you not to do this. You told me to do it because I was supposed to, but it was not my fault. And they end up getting rid of the COO, and John was able to keep his job. So just remember, folks, the news, by the time that these markets reach these news events, and we've seen it happen in silver and gold and cotton and everything else in the world. So remember, the news follows the trend, and that's all I have to say about that. Okay, the crude oil. Now, the last show, I believe it was on Monday, the 25th, we were making a 786 retracement down there at the 78.15 as I was on the air, and I said that looked like a really strong support in crude oil, and it held there. And if you'll look at Tiger TV, you'll see that it has made a 786 retracement yesterday down at the 78.45 level, and it made one last night at the 78.75 level, and has since moved a couple of dollars a barrel higher, and that's over $2,000. But the amount of money that you had to risk at buying at those 786s and using a stop of about 80 cents, which is about $800 in crude oil, would have paid good dividends. And all I'm trying to do is to show you that this market, you don't have to be a rocket scientist. This is very simple stuff. You have three higher bottoms. Each of the higher bottoms are exactly like the other ones. So, that's harmony, that's geometry, and, that's what we're trying to do, is to try to pick trades where you don't have to, pick an exotic spot on a stochastic or something like that. There's nothing wrong with stochastics and moving averages. I'm just a geometry trader. I just look at the swings of the patterns, and I believe in the swings. I know that the probabilities are on my side, and that's what I'm really looking for. Now, what led to this crude oil trade, and this is something that we had talked about last week. I've mentioned it in the newsletter several times, and that is that we've had this big butterfly pattern form in the futures for not natural gas, but for gasoline. and we have done that, and yet gasoline today has not been able to get out of its own way. It is actually doing it's pulling back to a 61% retracement, and this is an ideal situation for the same reason that we were looking at crude oil, is to possibly be, looking to be buying gasoline at 2.59 per gallon, and that would be a very, very low risk. But the important part of the chart that we're looking at for gasoline futures into Tiger TV is that the high was made on a bearish butterfly pattern back on in March at the $33.46 a gallon level, and now we have a bullish butterfly pattern forming down at $2.55 a gallon. So those patterns are doing the exact opposite. So, if we were willing to go short up there at that 345 level, we should be looking to go long, down in this level. And that's what I was trying to do, is to give you an idea of how to set up some of these trades. And this is what I'll be doing in a lot more detail into the on the July 11th. I'm going to do a webinar for the TFNN folks on how I trade and how I set things up. It's going to cover a lot of different things, but trade setups are very important because that's how you make your living. And I'm really looking at about 16 different things all day long, so it doesn't take a whole lot of time, to actually do some of these things, and that's what we're trying to look at. Someone asked me a question to take a look at the a gasoline contract on a shorter term basis, because I was saying that it was just pulling back. And if you have a chance to go in and take a look at it, I'm using the XRB, which is the nearest futures contract for gasoline. You'll see that it just completed a perfect 61% retracement at $2.60 cents per gallon, and we're up about almost $2 a gallon from that level. That's about $800, so it moves around quite a bit. But that pattern is what we were referring to. Is the exact thing happened that in crude oil. After they had a big move up, you wait to buy that first retracement, and we'll keep an eye on this one, because we're going to be on the air for tomorrow for the futures program, and we'll see what happens, with this. It has nice patterns, has good volume and liquidity and everything, so you don't have to be afraid of trading it, because the stops are very, very easy to put in, and they're filled very equitably, and so that's what we need to be looking at. Now, since we're talking about inflation and all these other things that we're talking about, DBA and some of these other things, someone's reading my mind. They asked me if I could cover silver. And I certainly am going to be covering silver and gold, because we're getting down to a point that we've tested this $25 an ounce level in silver for this is the fourth or fifth time that we've tested it, and this is going to be equivalent to the gold. Now, folks, the difference between trading gold and silver is like trading salt and pepper. Believe me, they are totally different, because silver has great volatility because it's a lot thinner. There's not as many traders doing it. It's about 20% of what gold does. So if you're interested in a market to trade, it's much better to trade the gold market than the silver market. I hardly ever trade silver. Gold is much easier to trade and far better as far as looking at the number sequences. Silver follows them very nicely. If you'll take a look at that weekly chart that I placed into Tiger TV, you'll see after that high was made in April, we made a perfect 61% retracement, and then we came down, and in February we made another perfect 61% retracement. These were within just a few pennies, and now what we're doing is we've been down so many weeks in a row. I think this is the 11th week or 12th week we've been down in silver, which means it's incredibly oversold, but it's not going up yet. So you have to be very, very careful here. And the same is true of the gold market, because the gold market, and I'm very bullish gold, but if gold goes below that 15.20 per ounce level, folks, it's going to be really difficult for gold to be really very, very bullish. That's just my opinion, because we have a very rare situation that I believe has happened in gold, and that is we've had a triple bottom form at the exact price of $15.22 per ounce, which was the 61% retracement of last year's low. And recently, on the daily charts, we've had some higher bottoms, so it's holding up. And we've got a call from Tom in Tampa. Are you there, Tom? Evidently, he must be out on the
Monday.
Oh, you're there,
Larry.
Hey, how are you?
Good. How you doing?
Good, thanks.
Good. I was listening to you there Monday. I just tuned in. I was listening to you comment a little bit there on gold. You were saying Monday that you felt that gold had a pretty good chance of breaking out here,
yes.
Possibly.
I still believe so, but the fact that it hasn't, given the fact that the rest of the world hasn't fallen apart and all the other commodities are going up, that's not a good sign, because usually it's inflation adjusted. People are looking at it, but we really need to. If you look at the chart that I put into Tiger TV, Tom, it's a triple bottom going back to last October, and then we tested it again in December. And then we tested it again just recently in the end of May at $5.22 per ounce. And if we should go below that, that sets up a lot lower prices in gold. But on the positive side, if we can get gold about $100 higher, well, not even $100, about $80 higher from where it is, if we can get it above $16.40, that would be a breakout to the upside, giving us objectives of well over $150 an ounce higher. So these are the parameters that I'm looking at. Right now, I'm still bullish. As long as we don't go below 16 or 15.25, I have to remain bullish.
Okay. All right. Thanks, Larry. Thanks for taking my call.
It's my pleasure, Tom, and I'm sure Tom remembers this, but gold has a tendency to move very, very quickly, and it can move $60 or $70 in a matter of a few hours. So, even though we have some narrow range days in here, that can change in just a minute. The good part of being long gold here is that, we've had higher bottoms, ever since the end of May, so we're going into 5 weeks now. We've had 1, 2, 3, 4, 5 higher bottoms, including today. Now, silver, on the other hand, just keeps going down. I mean, it has not had an up week in 11 weeks, so it's incredibly oversold. And when you stop and think that the rest of the commodity world of growing things, corn, wheat, beans, oil, all that stuff, rapeseed, rice, everything's going straight up, why isn't silver, which is usually an inflation hedge, going along with it? So that's a very, very interesting situation for me. People ask me about it all the time, and frankly, I haven't seen it before, because I've been in commodity business for a long time, and when all commodities go up, it's very difficult for precious metals to go down, but that's in fact happening, and so you have to say what is causing this, and I don't know the answer to it because I'm not a fundamentalist. I'm just looking at the prices, and if prices are going down, I know there's more selling, and the sellers have more power than the buyers, so that's all I really need to know. So that's what I'm watching. So we have to keep the pulse, keep the pulse of silver a little bit, because silver can move very, very quickly, and we've been down to this 2650 level, I think 4 or 5 times in just the last few weeks, and as long as it doesn't break there, it's got a chance to, have at least a short covering rally of some pretty good magnitude. That's what I would be looking at. But silver is not the greatest thing in the world to trade because of its illiquidity. That's just my opinion. And I trade it occasionally, but not that often. But we've been down since the middle of May. We've been testing this this 2660 level, and today's low we tested it again. And so it's just a question of whether it's going to hold it. It wouldn't surprise me to take it out by a little bit and then turn back up, because it's got to take it out by at least 80 cents to $1 an ounce in order to to really make a breakout to the downside. Okay, we've got one more break coming before the end of the show. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I want to finish up the show. Well, we've got a caller from Saratoga Springs. Robert, are you there?
Yes, I am, Larry. Thanks.
What can I do for you?
I just wanted to know if you see a butterfly pattern forming on this. Longer term, dating back to June of last year.
What is it that what is this?
I'm sorry, I thought you had it. It's BXX. It's Victor
BXX.
X-ray.
Let me double check. But while we're talking, I wanted to. Well, we had a big ABCD in the VIX index, last week at that 17 level, and that's moved pretty good, at least the first few days. But let me see if I have that in here. But someone asked me a question, when will be the next corn move, that type of thing. And, they always want to, get in and buy things when they can, cheap.
Yeah.
And so the only thing that I'm going to do, I'm going to end the show by putting up what I think is the next corn. I don't see anything here at all, my friend. The only thing I'm seeing in VIX this VXX, this ETF for the VIX index, is the fact that is this actually making new lows as we speak, or am I not? Hold on, I don't think it's updating. Hold on. Oh no. My stock, I had not updated this, but. If we could get it a little bit lower, you would have a little butterfly pattern down there at that 1320 level. That's correct.
Okay, and even like on a longer-term basis, dating back to July of last year, with that big spike up into the 56 area.
Yes.
Now the decline. I'm looking for it to get down to complete that around the 950 area. Yes,
it's going to have a lot of interesting support at that 127 at 1335, and then if it goes through that, 9 will be the next one.
Okay, great. Okay, thank you very much, Larry. I always enjoy your show. Yeah, thank you.
Oh, well, thank you very much. I appreciate that. Thanks for calling in. That's one of my favorite areas of New York, by the way. Okay, folks, we have just a few minutes left, and what I think is going to be the next big, the one that you're going to look back down the road and say, how did I ever miss this? And that is the Treasury bond market. This is the 30-year futures, 30-year Treasury bond futures going back 30 years, and we've completed a major butterfly, and the market is acting like it has. I mean, the market for bonds is just starting to drift a little bit lower. The open interest has stopped increasing, so players are leaving, so they're getting tired, and that means the people that have been making money will not start making money, will start losing money. That means interest rates will probably go higher. And we'll have to see if this is going to occur the way I think it's going to. But if you can get to buy that TBT anywhere around that 15.25, or you can sell the bonds up at that 150.15 level, I think that would be a pretty good place. And these markets are moving so they're starting to get more and more volatile. We're starting to see moves of 100, 150 points in the Dow very, very quickly now. And, we're seeing moves of $40, $50, $60 in gold, $2 or $3 in crude oil. That means that volatility is coming in. This is what we've been expecting. And this is it, folks. Have a wonderful day, and may God bless.
Great Basin Gold